Hello, this is Dave, and welcome to Equity Story. I'm here with Mr. Wolf, and obviously this is just a general share advice and not personal advice. And happy to say, at the moment, obviously the market's not looking too bad. Wolf, I've just got to quickly. Karen's just asked me to explain something to members of Equity Story, so I'll just take our photo away just for a second. A lot of people at the moment are going on, and like I said yesterday, thank you for this. Looking at doing well, doing the Equity Story IPO, and some people just get a little bit confused which buttons to press. So basically, it's very simple. You just go to the Investor Center, and that's on the front of our website. So before you log in, you just scroll down and press the Accept button, and then you put in the country, Australia, the state, so for example New South Wales, and like a postcode, so wherever you're at. Then you can read the prospectus and download it, and then you've got to tick a button saying that you've read the prospectus, and then basically you click next, and then you put the amount in. So um, the minimum is 2,000, and you can go upwards to whatever you like, uh, 500,000 like Wolfie did. Um, so
But I think Dave, it's actually very, very important as a fundamental analyst to read the prospectus. I think it's any investment you're going to make, at least do some research. So definitely. However, you know us, we're bloody good.
all right, but it's a pretty easy form to do. But like I said, just go to the front of the website and click Investor Center, and then you'll be away. And again, thank you guys. It's amazing. Everybody wants to be a part of this story. So yeah, and growing with everyone over the next 4 or 5 years is going to be fantastic.
Exciting.
Yeah, it is. All right, Wolf, let's get to business. There's so many announcements today. We've already culled a number of them, like some which we thought about talking about, but the charts just weren't there. But although certainly worrying times with the issues you've got at the moment happening in Ukraine and inflation, we have some companies absolutely knocking the lights out, right?
Yeah, absolutely.
Uh,
War, not war, Dave. There's companies that are delivering, pretty good results, which you got to respect and say to yourself, if there was no war, I'd be probably buying these up, lapping these up, really.
so let's have a look at some of them that need to be on our watch list, right?
Mhm.
And as soon as things have relaxed a little bit, or we get a good chart, maybe we should start, especially if you've got a longer term approach, looking to accumulate these stories.
Yeah.
The first off the cab wolf is Pexa.
Hmm.
Now, the price action today has been very, very good. It's up 9%. It's starting to sort of jump quite nicely. Although it's a very early chart, it's starting to swing, which is what you want to see.
Hmm.
And one feels by the end of the week, if it ends here, it could at least go back and retest that 20 level.
Hmm.
How the announcement was totally outdid the prospectus.
Yeah, it was crazy numbers, right? They come up with so really strong growth. So Pexa is in the I think settlement conveyancing business and pretty much monopoly right here in Australia. So they're pushing into the UK as well, and it just reflects the strong market that we've got here in Australia for the housing market. And the numbers really blew out the prospectus by 15 to 20% on most metrics. So they've upgraded the guidance already. And it's only been listed for 6 months, Dave. So, that's the sort of storage you want to buy and hold on, whether it's expensive or not. And always, the question now we has to be posed for every single story we've got. I don't, when I think about the growth, when I think about that outperformance here, I'm thinking, okay, I'm liking the story. I want to buy it, but I just need to see the market settle down a bit, and hopefully, buy it on the way up. And it's good to see the market getting this story getting rewarded by the market in even a market like this. Disclaimer, by the way, I am holding this, but I'm probably not going to be jumping in yet. I am going to, if I want some more, I'm going to just wait till the end of the week and then at least wait to see what's going on next.
It's interesting, Wolf. Our
Mm.
market is actually up at the moment.
Mm.
I think what we've seen so far, the sort of maybe the decline we've had in America, have the Ukraine situation has been factored in a little bit. So
Mm-hmm.
what we have to see is if that escalates, then maybe then the market will re-rate again, maybe another 4 or
Mm-hmm.
5%.
Yep.
But at the moment, so far, so far, so good, I suppose.
Yeah, fingers crossed. So anyway, this is probably top of my list to buy, and probably the number one story today, I think, of the bigger companies. I mean, it's a $3 billion company and really smashed the special numbers out.
Wolf, PSI, again, another company that had a tremendous announcement. 28% increase in underlying revenue to 119.7 million.
Yep.
Very impressive.
Yeah, plus, this is actually an insurer. Insurers usually tend to do well in a rising interest rate environment. So, is it a company that you maybe have to have a look at? I think so. The only problem with it, while the numbers look good, it's just a little bit expensive, 35 times. With today's numbers, it's probably going to drop it down, maybe just below 30. So just, maybe at $4.50, I'd have a look at it, or maybe even lower at $4.20, I'd be looking at. So watch list. Let's see what happens.
Wolf, but two interesting stories definitely that everyone should have on their watch list. And if they're on Einstein's on the weekend, I'd be having a look at them.
Yep.
PLS, Wolf.
Yes.
Obviously, it's just had a tremendous run. What did you make of the announcement today?
Yeah, look, the numbers was okay. It's really, for me, the story is all about lithium prices. So that move up from 21 at $1 to $4, I think it's overdone. So it's obviously come back now to $2.87. Is it got enough legs to hold on to that? One hopes so. The results were okay. So from that point of view, the space is excellence. I might use those trend lines as my last line of defense, maybe, unless if you're long term, I then use the 240.
Brilliant, Wolf. Next one I think we need to talk about is Worley, because Wolf, I look on this price action, right? Certainly, let's have a look on the daily, and you just feel if this ends around 12.38, it's a buy. Now, the only reason I wouldn't put it on as a buy at the moment is just the way the market is. There's too much volatility for short-term trading. But certainly the price action's excellent, and it's also in the right space, isn't it? Servicing the oil and gas industry. So
yeah, not just that. Plus the renewable industry, right? So they are changing their business model and obviously planning for the future, which is brilliant, right? But also, of course, still doing the legacy type stuff, which is best of both worlds at the moment.
But Wolf, their sort of their underlying EBITDA was 251 million compared to 207 million. That's quite a decent leap.
It is a decent leap, and it should be on the improve, and the numbers are showing that it's on the improve. So, Dave, this is a trade for me. Taking it up maybe to that 13, 14, that 13, 14 bucks would be my sort of first look through. When you look at it, it's not too expensive. The next 12 months, it's trading on 17 times. And it's got a dividend yield of 4.5%. So all up, this is attractive.
You got me now, Wolf. It's balancing the markets, which there is a possibility these markets could go down a lot more, and if that happens, it's going to be a hard trade. So, what?
I suppose that's a caveat, isn't it? That it's a tentative trade because there could be a big turnaround in oil and gas.
Yeah, definitely. I prefer to wait to the end of the week at the moment.
Well, leave it with.
But I think if this looks like this on the end of the week, Wolf, can you just put a reminder that we talk about it on Friday and see how it's looking?
I'm sure our members are probably going to be marking this down on the fridge calendar.
Right. So listen, I think if it's looking like it is come sort of Friday, it's definitely worth a trade.
Yeah, I love big companies now, especially ones that are post-pandemic on the up, and people are looking for value and dividends. This, probably ticks some boxes here.
All right, let's have a look at.
Let's look at it on Friday.
LYL Wolf.
Yes.
You were very impressed with this the announcement.
Yeah, no, look, just a quick. Remember, I'm going through just quick flick throughs the numbers. So probably the first page, second page, and I move on. So if I get anything wrong, apologies, but I'm just going through and giving my quick opinion, what I think of these results. Looking at the numbers here, trading on 14 times, dividend yields of 7%, Dave. So it ticks a lot of boxes again in that value, dividends, the investment fraternity are focusing on these sort of stories. And the actual numbers today were very good. So you've got another company that potentially by the end of the week, Dave, I might be looking at for a trade or a 6 to 12 month investment.
Yeah, definitely. And they also deal with obviously the Sandfire, quite a few projects in Africa. They seem to have a pretty stable. They look like they're dealing with a lot of doing the infrastructure and servicing
Mining services, yeah, absolutely.
a lot of gold mines, which gold looking quite strong at the moment. You can see it the next 6 months holding up reasonably well.
Agreed.
Yeah, some interesting stories. Let's have a look at SFC, Wolf. So again, this is a dividend play, slightly down, but you're a little bit surprised with this because they actually flagged this already. But
we talked about it at the time when we put it on top 21 that this is probably the one that you want to just wait for the results to come through because they flagged that's going to be a weak first half. But then again, they talked about that that's going to follow up with a very strong second half. And I think that's what they're keeping the line here at. The most important thing for me, they pretty much come up with what they said. The dividend's steady, so nothing's changed there. So I suppose it's more of a recovery play because a lot of the bulk of their revenues comes from the car seats, and there's a big demand for the cars at the moment. So wait for it to stop falling, and then you nibble. So definitely on my watch list to buy.
All right, looking good. And again, it's a dividend play, so you can use it on a monthly chart.
Absolutely, and looks great on a monthly.
Yeah, it's true. It looks superb, doesn't it? PRU, a pretty decent chart, down today, Wolf. I don't know if that's so much profit taking on gold or there was something in the announcement that scared the market. I don't know if you had time.
It's a good question. I had a quick brief look through it. The headline numbers look pretty good. I think maybe the production stuff probably is the question for me. I didn't look through in detail, so maybe that's what's happening here. But generally speaking, again, you're trading their gold price more than we know. It's a producer. We know it makes money. It was a good profit today. So you are trading a lot of their gold prices here with a view that if there's going to be a report, just be careful. But it's still holding reasonably well. So I'd say don't panic yet if you're in it, and come back on Friday and see where it's at.
Domino's, Wolf, again, how good is the CTM? Really, these things break trend. You've got to get out and look 120 down to 87.
Yep.
That is actually historically can be a little bit of support. What's your take on Domino's? Because it was very, very expensive, obviously at $1.60. It's still not cheap, is it?
No, it isn't. And this is the thing: is at $160, they would have been trading on about 80 times, 90 times. So now it's halved, and it's trading on 47 times. And the numbers that come out today doesn't justify 47 times either. It probably justifies 20 times. So does this mean that it needs to half again? I don't know. This is a tricky one for me because the numbers, I think, 11% growth top line, but actually went backwards due to costs.
Well, Wolf, you think
pressures. I mean, that's the problem here.
Well, you think they would? I mean, we look at the commodities every day; they're up through the roof. Surely the price of bread and the price of sort of meat, their margins are going to get squeezed, aren't they?
Yeah, so I think, okay, looking at it objectively, I'd rather be somewhere else, to be honest, because it could still keep CRE rating even further down. And I just don't want to be in this. I'd rather look at something like a Wally's. I mean, it makes sense.
Well, this is a CTM. Why would you be in that when you could be in the one which is in the right business at the right time and
on the improve?
On the improve, correct. And then talking about one of those stories is obviously CRN, so which is on the improve and actually sort of, if it can do a little bit more and hold up, it's still going to be closing at sort of record yearly highs, which is impressive.
Yeah. Yeah. Look, again, the numbers were decent in there. Coal's going still quite well. If you like the space and a trader, one on your watch list, 100%.
Wolf, AIM. Now, obviously, the share price action from has been horrendous, but
To say the least.
to say the least. But explain it. You're really liking the fundamentals of the story. You're a little bit perplexed with this one, Wolfie.
Well, not perplexed. Look, I know that markets just not interested in the small tech stocks, a lot of them, right? So I understand that part. Maybe what I'm perplexed about. So yeah, look, I am perplexed in a way, but not perplexed as in I'm dumbfounded that I don't know what's going on. I obviously understand that the market's just not happy with it, but it's really flying under the radar. I think that's the thing here. The company is actually decent for me. It's market cap $111 million. It's coming up with revenues of about 60 mil. Dave, I think they gave a guidance of between 60 and 63. So you've got your company that's trading on 2 times revenues. That's cheap. And talking about improve on the bottom line, they're looking to go cash flow positive by the end of the year. Could see a re-rating, basically.
Yeah. So possibly that 60 could end up as support.
Possibly, yeah. So chuck it on your watch list.
Yeah, this is another one that needs to go up on that watch list, isn't it, for people to have a look at it. So, you've got PEXA, you've got AIM, PSI, and certainly Woolies looking, 4 stories looking very, very interesting. All right, Wolf, we're going down the list, and
ALC
struggling. Obviously, let's go back to the weekly because obviously we see it a little bit better. Had that big raise at 25, which bouncing off that support trend line. What's your take? Yeah, the good and bad in the announcement, wasn't there?
Yeah, there was. The top line grew, the bottom line blew out, and unfortunately, the stronger indicator at the moment, Dave, is the bottom line, right? We've seen this with a lot of companies. They just don't want to take any prisoners with anything that's blowing out in the bottom line. So, unfortunately, even if it's a one-off or not, with acquisition costs, restructuring, and so on, the markets are just not taking any prisoners. So, for me, we're out anyway, according to the CTM. So we're just not interested. We love the story, but I'm just not interested in it right now.
AEF, Australian Ethical Fund, not that ethical, I think, but again, looking pretty weak. So, and looks like obviously if the markets do go down lower, which I think we expect they are going to do, and we've said everyone, our belief they could keep on trickling down over the next month. You could see this coming down, Wolf, a lot lower, but at least back down to that $6 level.
Now, before AF sues us for saying they're not ethical, they are ethical, Dave. The fact is, it's the investments they might be doing.
It's you that said they're not very ethical to me.
I didn't say that unethical. I said an ethical fund that invests into maybe normal companies. I don't know how ethical are those companies like BHPs and so on, Rios, blowing up gorges.
Okay. Okay, but anyway, at least they're trying. Let's not.
They are trying, and the thing is, they're going to probably go up and down with the markets, right? So
yeah,
that's the bottom line here, and it reflects what's happening right now in the market, the way they're trading.
Yeah, at least the heart's in the right place. That's the main thing.
Correct.
We
don't upset anyone.
All right. Well, what about WiseTech?
Okay.
Because Wolf, I don't get this, right? All these companies are getting absolutely hammered trading on these high multiples, and WiseTech is like happily sitting there on, I don't know, 132 times.
Well, you're very, very harsh. 132 times, 128. Thank you.
Okay, 128. It doesn't give a dividend, and
well, hang on. You're very, very harsh there as well. 0.22%.
But I mean,
okay.
Why would you be in this? I mean, they must have come out with an amazing announcement today.
They did come up with an amazing announcement. They had to pull a rabbit out of the hat, and they did with an upgrade. So how are they going to save themselves? Come up with some sort of incredible, line grabbing, spotlight grabbing announcement, and they did that. So you got to take the hat off and say, well done to you, WiseTech. However, am I going to be paying 128 times for this? No bloody way in this market.
Yeah. Okay. If you're in it, sell it technically, sell it fundamentally, and and yeah, it's amazing price action.
Yeah, I think the risks are to the downside. I think that's what I think here with how the market's moving, how the market is repricing things, and you can see today's action. Even though it looks like a brilliant result, it's actually not pushing it that far, is it?
I'll tell you what, yeah, and it seems very well supported by funds actually.
Yeah,
so,
it is. It's a market darling. I mean that is the case of this thing. So it might be, there might be a lot of love for this. So that's why it's still holding on at 120 something PE.
Wolf, CQR, which again is another decent dividend stock, coming up with another decent announcement.
Yeah, absolutely. We've seen repeat after repeat after repeat of these REITs coming up with very good results. Trading on 8 times PE, cheap. Trading on a 6 times yield, cheap.
Yeah, very good. And the chart looks excellent.
So if you're looking for a dividend player, there you go.
Wolf, APA. So
I didn't see that one, so I can't comment at all. I haven't even flicked through it, so apologies there straight away.
All right, we'll talk about it tomorrow because it's in an interesting sector. I mean, it's a stable story, right? And it's a dividend play, but the chart looks good. We'll have a look at that tomorrow.
Okay.
Let's have a look at EVS because Saved by the Bell, really. Is that announcement good enough for them to more or less hold trend or at least smudge it?
I hope so. Look, I like the story because it's in the environmental space, right? We love that space at the moment. This is a very, very strong, probably top 3 global theme at the moment, climate change, right? And companies that are addressing that. So yeah, up there. Is that announcement strong enough for me to hold it up and push it higher? I'm not so sure because it's still unprofitable, Dave. So that's the thing that's going against it. The top line's growing, yes. The losses are narrowing, yes. So that's two boxes, but the market wants answers now. They want profitability now. So if we had some patience, yeah, probably possibly hold. But for me, I don't know. I'm sort of going to sit on the sidelines here. So I'll leave it to you. I can see improvement. I can see long-term positivity, but at the moment, I'll leave it to you with the chart.
You just basically you play by the charts, and it's still a hold just at the moment.
All right, fair enough.
Woolworths, fighting back, but we prefer Coles. Coles, we better value, slightly better dividend. We prefer Metcash, better dividend, slightly better value. But still technically you wouldn't be buying this actually, Wolf.
No, it was very messy because of course they shed Endeavour not too long ago, which by the way did fantastically well. So, ouch. Woolies, because that was probably a big winner. Would have been a big winner for them on their books. Saying that, look again, Woolies is definitely still a decent story. I still prefer Coles though, like you said. So yeah, too expensive for me. It was very messy result, by the way. So I'd rather see their dust settle before I look at it again.
Wolf, nickel doing very, very well, and nickel mines coming out and holding up around that trend. And I think if you're in a nickel play, it's certainly it's fine to be in there and hold it at the moment. Well,
Dave, we looked at the charts yesterday, on our Ask the Analyst, and that nickel charts was just extraordinary, wasn't it? It was so bullish.
It's sort of lithium-like, isn't it?
Yeah, I know. It's a bit scary actually. It's because what goes up must come down.
Wolf, just having a look at obviously COS.
Yep.
This has been a frustrating story because they've never failed not to deliver quarter on quarter and quarter, and they just sort of drifted sideways, which is a little bit of a surprise. But again, another very strong announcement of COS.
Again, yeah, absolutely, very strong. I suppose the only thing now, when you look back over the last, say, 24 months, they had a good run, right, from 30 to 70.
Yeah, quite right. And maybe we're just being a little bit too. We put them in the wrong bracket. They had.
Yeah, we did. I think we did because they were expensive, right? On a now valuation, which is very, very important. Before it wasn't, right? It's still trading on 22 times, so it's not as if it's cheap stock. But with this result, trading on 22 times, probably now trading about 20 times, even below that. It's starting to look very, very, very attractive, Dave. So are we finally going to see that 80 cents and actually go beyond the next 12 months? Possibly. I think this is one of the dark horses for a good run.
All right, I'm gonna get this back on the watch list, Wolf, and
Mhm.
again, it'd be interesting to see where it is by the end of the week.
Yep.
Hills came out. Obviously, it's been selling off since it broke
Mhm.
trend, but uh, in all fairness, it's up today, and I think the market quite liking the announcements. But technically, it's not a buy for me, and I think fundamentally, it's not in the right space for you to want to look at that stock at the moment.
Yeah, absolutely. I think it's the market's just feeling its way around with this Sonics, the Heliuses, just to see where they're going to land. So I think for the moment, stick away.
Wolf, SYM came up. This is the old MNF, right? So if I get the old MNF chart, we can have a look at it, and you can see it was having a fantastic run. At the
Mm-hmm.
moment, it's sort of come back to this sort of but basically sort of 560 range.
Mm-hmm.
Just go back to the obviously the new chart. Well, I know this is a company that you're liking MNF, Wolf.
Mm-hmm.
Um, it's obviously technically it's not a buy for me at the moment, but for you, definitely one on the watch list.
It is, and I'm not surprised it's come back. The re-ratings happened. It was actually expensive. It was trading on 40 times. So, this come back already to 570 as it got more room to give, quite possibly. So that's why I'm not jumping in. I like the results are starting to improve. It's on the improve. So one should go on the watch list to see where it's going to end up. But, I'm reluctant to pay 40 times for stories in this market.
Okay, I've got 30, Wolf. I don't know. Is that?
Yeah, you could possibly be right, but it's probably about 28 now.
Okay, so this could come back down to five,
Five.
four,
I
four.
reckon five would be probably around about the first one I'd look at.
Brilliant. Wolf, we have to mention your one one of your favorite stories because you love oat milk, goat milk,
Not goat milk, goat cheese.
goat cheese, whatever. So tell me about Bubs. Are you still drinking your baby Bubs
No,
formula?
but I'm still smashing down a lot of goat cheese. That's for sure. Can't get enough of it. Look, there was definitely an improvement on the bottom line for Bub. That's what you're sort of looking at. That's what the market is focusing on. So there's a bit of life. There's an improve there. Obviously, I would not be getting in yet or buying it yet, but give it another 6 months, maybe even less than that. You never know. It could get on a roll with a couple of good updates.
Yeah, well, technically, it's definitely not a buy, so
Not at the moment.
not at the moment. And Wolf, lastly but not least, CXL. So, the chart doesn't look too bad. It's starting to look a little bit sideways right now at the moment. If this went below 487, you'd have to sell it.
Mm-hmm.
Do you think this could hold up in the climate?
Personally, no. I'll tell you the reason why.
Go on.
800 and something million market cap. And let me tell you, the revenues were. So I know, look, I know it's in a great space. I love the story. Don't get me wrong. But look at the run. $1 to $7, $8. I mean, that is just mind-bending stuff, right? It needs to come back further for me. So if I tell you that this is, hang on, CXL, let's go back. And, the revenue increase wasn't that fantastic. Yeah, I know they're working. They've got some technologies and so on. But I'm not just going to buy stuff on technologies. I want to see some, and the market, I think, wants to see some progress on the revenue line and profitability line. I mean, that's what the market's turning into. So if I look at half-year update, and just give me one moment.
Well, yeah, I've got here total sales grew by 0.6 million. That's not much, is it?
No. So there you go. So yeah, exactly. So from 9.2 to 9.8. If this was a normal stock, you wouldn't even go, well, bugger it. Much better stories
All
out
right.
there.
So this is one of those cases where, listen to Wolf. Really the fundamentals are overriding the price action, and maybe this is being supported by a few funds,
Five
but
months out.
yeah, FOMOs. But so for us, sell, get out of it,
Mm-hmm.
and put the money elsewhere.
Yep. Agree.
Wolf, on that note, listen, thank you very much. Absolutely superb. Going for all these stories. Great to see our market actually bouncing back, which is good to see. So,
NTD.
oh,
One more,
of
because that
course,
was the last night's
yeah,
job.
Isn't it funny how they come out? They'll come out in the evening if the reports are not that good.
Yeah, yeah, and we need to talk about it because it's part of our dividend story. So let's have a quick look.
Technically, dividend play. Technically, it's holding up, Wolf. I'm
Yep,
okay with it.
I'm okay with the fundamentals too. I know that had the top line grew, but the bottom line blew out. Again, there was acquisition costs. There were restructuring costs in there. So there's a lot of one-offs. That's why the bottom line almost half. But because it was a one-off, they didn't think too much of it, and they kept the dividend the same. So for a dividend play, to keep the dividend the same, even your bottom line's fluctuating, I'll take it.
All right, brilliant, Wolf. On that note, listen, thank you very much for listening to Equity Story.
Mm-hmm.
We hope we've given you sort of, plenty of stocks to look at, and we're just gonna, there's a number of stories there like PEXA, PSI, COS, Worley. Where we're happy to look at those and maybe put them out as a trend on Friday. But we just need to see what develops over the next 2 or 3 days with obviously these world political events at the moment, which at the end of the day are looking a little bit scary. And me and Wolf we were sort of talking about this earlier, and there you go. Look at Woolies, Wolf. It's still marching on, but there is a little bit of concern that possibly the markets are sort of underplaying the Ukrainian situation. So let's hope they're not. Let's pray to God they're not, obviously. But so there's a risk event there. We just need to wait till I think the weekend, and before we make those decisions, what stocks we're going to go for.
I think definitely by the weekend we'll probably a bit more clarity what's happening in the Russia-Ukraine conflict. So yeah, let's not just jump in too early, because like you said, absolutely, the market might be mispricing everything because they think that it's not going to get any worse than that. We've seen surprises before, Dave, that no one was anticipating. So let's just settle down and wait.
On that note, Wolfie, I'd like to thank you very, very much, and I look forward to obviously doing this tomorrow. Thanks, Wolfie.
Okay. Cheers. Bye guys.